Hello everyone, I'm Hiromi Tosha, President of IINO Lines. Today, Director and Managing Executive Officer Yusuke Otani will be explaining our financial results, but before he does, I would like to say a few words. The first half of fiscal 2022 was the first half of the final year of our current mid-term management plan, and in our forecasts for full fiscal 2022 financial results, we are expecting to achieve record high profit. Also, with respect to non-financial initiatives, we have been accelerating our ESG efforts, including the creation of a new Sustainability Promotion Department. Although our time is short, I look forward to a very meaningful session with all of you in attendance today. Director Otani will now explain our financial results. Hello everyone, my name is Yusuke Otani, and I am in charge of our Corporate Planning Department, Stakeholder Relations Department, and Sustainability Promotion Department. First, I would like to explain the flow of today's presentation. I will start by giving an overview of our financial results for the first half of fiscal 2022, as well as discuss our outlook for full fiscal 2022. After that, I will talk about our progress on our mid-term management plan, as well as our efforts related to sustainability. I will begin by explaining our results in the first half of fiscal 2022. In terms of financial results highlights for the first half of fiscal 2022, we saw a significant increase in sales and profit compared to the first half of fiscal 2021. The main reasons for this were the depreciation of the yen, the strong market conditions for dry bulk carriers, as well as the increase in the chemical tanker market prices that accompanied the change in the flow of maritime transport logistics for petroleum products and petrochemical products due to the war in Ukraine. For the full fiscal 2022, we are forecasting higher sales and profit compared to our previous forecast. These upward revisions are based on our expectation for the chemical tanker market to remain at a high level through the end of the calendar year, as well as our revision of our exchange rate assumption to 140 yen to the US dollar, despite some softening in dry bulk carrier market conditions. With this, we are expecting record highs for both ordinary profit and net income. With respect to our dividend for the full fiscal year, we have made no changes to our basic policy of a dividend payout ratio of 30%. President Hiromi Tosha will discuss our dividends at the end of the presentation. Next, for an overview of our consolidated financial results and results by segment for the first half of fiscal 2022, please have a look at page 5. We posted significant year-on-year increases in each profit line of operating profit, ordinary profit, and net income. The main factors for the increase in ordinary profit were the increase in operating profit and the large impact from the depreciation of the yen. The key factor causing net income to exceed ordinary profit was the gain on the sale of an oil tanker during the period. In terms of operating profit by segment, there were improvements in all three segments: ocean-going shipping, short-sea domestic shipping, and real estate. I will use this waterfall graph to compare operating profit in the first half of fiscal 2022 with operating profit in the first half of fiscal 2021. Operating profit in the first half of fiscal 2022 was 8.66 billion yen higher than in the first half of fiscal 2021. The main factor for this was the change in marine transport volume of petroleum products and petrochemical products in the chemical tanker segment as a result of the war in Ukraine. Europe began importing petroleum products and petrochemical products from the Middle East and the United States, resulting in an increase in ton miles. The main reason for this were the increase in demand for both petroleum product tankers and chemical tankers respectively, and the tightening of supply and demand for shipping capacity. Next, for dry bulk carriers, we enjoyed favorable market conditions through around June, leading to higher operating profit. With respect to other factors, the depreciation of the yen led to an increase in profit, while for large gas carriers and oil tankers, we have been securing stable earnings for some time now by keeping our fleets on medium to long-term contracts, and the non-recurrence of docking costs during the period contributed to profit. Moving along, I will discuss our forecasts for fiscal 2022 and our market outlook going forward. This shows our forecasts for fiscal 2022. For our consolidated results forecast for the full fiscal year, we are now forecasting net sales of 138 billion yen, operating profit of 14.7 billion yen, an ordinary profit of 16.2 billion yen, and net profit of 18.6 billion yen. These forecasts are higher than those we announced in August. With this, we are expecting record highs for net sales, ordinary profit, and net income. Meanwhile, fiscal first half figures are significantly larger than fiscal second half figures. Here we are factoring in a slight deterioration in the market conditions in the fiscal second half caused by several factors, including concern about the global economic downturn, as well as our assumption that the chemical tanker market, which has been strong, will settle down before the end of the calendar year, along with an expected increase in costs due to a concentration of vessels docking for repairs in the fiscal second half, as a result from the postponement of dockings initially scheduled for the fiscal first half. Also, we post the latest data on the chemical tanker market conditions on our website in the middle of each month, so please refer to that as well. Next, I will discuss the gap between fiscal 2021 operating profit and our forecast for fiscal 2022 operating profit. We expect operating profit to increase 7.18 billion yen compared to fiscal 2021. The main factor for this was our addition of further profits, factoring in favourable market conditions for both chemical tankers and dry bulk carriers. In large gas carriers, we expect profit to increase as a result of the higher market prices for large gas carriers, the non-recurrence of docking costs for an LNG carrier, and the delivery of the newly built Kaiun gas dual-fuel LPG carrier. However, in real estate, we are forecasting a year-on-year decline in operating profit due to higher costs resulting from an increase in management costs, especially electricity and other utility costs, despite high office floor occupancy rates. Next, I will now talk about the outlooks for chemical tankers, large gas carriers, and dry bulk carriers, which are all impacted by changing market conditions. I will start with the chemical tanker market. As it turns out, the influx of new builds is limited and market conditions are expected to stay generally firm. However, global economic stagnation is one of a few concerns. The positive factors include the continued tightening of supply and demand for shipping capacity due to new petrochemical plants coming online in the Middle East and the US, new transport demand, and the increase in ton miles arising from the situation in Ukraine, the limited influx of new building vessels, the exiting of product tankers from the chemical tanker market, and more stringent quarantines at Chinese ports and harbours. On the other hand, given the fact that demand for the transport of petrochemical products is generally aligned with GDP growth, there is concern about the possibility of a decline in demand due to global economic stagnation or an economic downturn resulting from inflation or monetary tightening. Our financial results forecast for fiscal 2022 is based on the assumption that the current favourable market conditions will calm down slightly from the beginning of 2023. I will now move along to the market outlook for large gas carriers. In short, we're expecting market conditions to remain relatively stable, although we anticipate some impact from the deterioration in balance between supply and demand in shipping capacity. In terms of positive factors, we're expecting robust maritime transport volume resulting from demand from PDH plants in China, residential demand in India and Southeast Asia, and the increase in the price competitiveness of LPG due to soaring crude oil prices and a tightening of the supply-demand balance for shipping capacity resulting from the increase in vessel congestion in the Panama Canal. In terms of concerns, a large number of cutting-edge new-building vessels equipped with LPG dual-fuel engines are expected to be delivered, while on the other hand, there are few old vessels and not many are expected to be scrapped, so we anticipate an increase in the shipping tonnage volume. Finally, I would like to talk about our outlook for the dry bulk carrier market. Here, to sum it up, a global economic slowdown is expected, so the future outlook remains very uncertain, and we need to keep a close watch on developments with the transport of Ukrainian grain. In terms of positive factors, we're expecting very little pressure from the influx of new building vessels, and there should not be a significant impact on the supply and demand in shipping capacity. On the other hand, there are a number of concerns. This holds true for other vessel types as well, but in terms of maritime transport volume, the global economic slowdown due to ongoing interest rate hikes and ongoing inflation and economic cooling, particularly in China, may result in a downturn in iron ore transport demand, as well as a decline in the container vessel market, a loss in switchover transport demand using handy vessels, and the resolution of both long-term vessel congestion that arose during the COVID-19 pandemic and disruptions in logistics networks could result in the possibility of a loosening of the supply-demand balance in shipping capacity. Finally, I would like to discuss our progress with respect to our mid-term management plan. This slide shows the extent to which we have achieved the numerical targets in our mid-term management plan. I will omit the details about our results forecasts, as I just discussed them. However, the main ideas here are that in the shipping business we expect to achieve our operating profit target for the entire period due to improvements in market conditions in each segment, those being chemical tankers, large gas carriers and dry bulk carriers, as well as through factors including the acquisition of favourable contracts and the effective deployment of vessels. On the other hand, in the real estate business, we expect to fall short of our operating profit target. There are several reasons for this, including the decline in the utilization of IINO Hall and our photo studios due to the impacts of the COVID-19 pandemic, a prolonged period of partial vacancies for newly opened office buildings we own, as well as an increase in maintenance and repair expenses related to consumables, especially at the IINO building, so we expect results to fall a bit short of our target. This slide shows our organization building with respect to the mid-term management plan. In addition to the IINO DX Task Force and the Business Strategy Department, which are already up and running, we have newly created a Sustainability Promotion Department and a Technical Department. All of these units were created in order to further enhance the promotion of ESG management and our execution of priority strengthening measures. I am in charge of the Sustainability Promotion Department, and within the department we have formed a working group to address environment matters, including the certification of science-based targets and the review of greenhouse gas reduction targets, as well as overall CSR issues, including human rights and supply chain response. Meanwhile, the technical department is providing technical support for efforts such as reducing the environmental impact of vessels and further strengthening measures aimed at achieving greenhouse gas reduction targets. Moving along, this slide lists some highlights related to our priority strengthening measures in chronological order. Just to give you some recent examples, in recognition of our sustainability efforts, we were selected as a constituent stock in 2 FTSE Russell indices. In the real estate segment, we are advancing environmental initiatives, including having started to operate a solar power generation facility at the IINO building, while we also began purchasing carbon-neutral city gas at our Shiodomi Shibodikyu building. On the next slide, I will talk about our human rights policy and our anti-corruption policy, which we formulated since our last results announcement, as well as our real estate efforts in the United States. As we have already announced on our website, we established the IINO Group Human Rights Policy and the IINO Group Anti-Corruption Policy. These were established in order to advance social and governance initiatives identified as our materiality. We also held internal briefings for all group employees in order to communicate to them the key points and confirm their understanding of these policies. We are currently identifying risks, which is the first step of due diligence, in order to implement human rights measures throughout the supply chain going forward, in accordance with the guiding principles on business and human rights advocated by the United Nations, as well as Japan's National Action Plan. Next, I would like to talk about our participation in the Press Block Project, a redevelopment project in the city of Portland, Oregon, in the United States. This is our second overseas real estate project, following our project in London. Through this project in the United States, we will acquire overseas knowledge and build relationships with US-based companies in the real estate domain, which we hope to leverage in future business development. Going forward, we will continue to invest in quality real estate, both in Japan and overseas. Next, this page shows our progress and future initiatives with respect to our priority strengthening measures. As noted on the very bottom of the slide, we have established greenhouse gas reduction targets, and we are currently making steady progress on reducing emissions towards achieving our 2030 targets. We plan to obtain certification on our fiscal 2021 emissions going forward. Also, we have started formulating our next mid-term management plan, and as part of this, we will hold discussions about new priority strengthening measures. This slide shows our social and governance initiatives. As you can see, we are advancing social and governance efforts in other areas besides human rights and preventing corruption, which I discussed just a moment ago. Next, using this slide, I would like to talk about our progress on accelerating digital transformation, which we call DX. In short, we have made steady progress on advancing digitalization. I would like to introduce two examples. The first is our deployment of a new fleet management system called VIP. This system enables real-time sharing of information between the head office, Dubai and Singapore. With the system's usability and the data obtained, we are planning to expand the scope of deployment of this system beyond the chemical tanker division to the shipping divisions in the Tokyo office as well. The second example involves collaboration with a startup company. It is our joint development of a carbon intensity indicator, or CII, optimization tool with Bearing. This system will allow us to comply with CII regulations, which will come into effect starting in January 2023, and will enable us to make future forecasts. With these initiatives, we will strive to reduce fuel costs through effective vessel deployment. In terms of the current level of progress, we have already started using the tool for approximately 20 vessels that we manage. Going forward, we plan to expand the scope of operation to the rest of the vessels we manage, as well as the vessels chartered from outside entities. Now, President Hiromi Tosha will discuss our shareholder return policy. To conclude, I would like to speak about our dividend. We clarified our shareholder return policy in the current mid-term management plan. We have added the idea of dividends linked to business performance to our existing policy of stable dividends, and we have set a dividend payout ratio of 30% as a benchmark. In line with this policy, we plan to pay an annual dividend of 53 yen per share for fiscal 2022, which is the sum of the interim dividend of 27 yen and a year-end dividend of 26 yen. All of us at IINO Group will be working as a unified team and redoubling our efforts to improve our financial results.